Welcome to Pressure Points. I'm Gene Munster. Our topic is NVIDIA earnings. Before we jump into the pressure point, I want to give some context about what the quarter and the outlook were like. In terms of the quarter, it was as expected, impressive. They beat on top and bottom line. But of course, in any company, and especially with a company like NVIDIA that's grown so fast, the stock is up so much over the past year, all eyes were on the January revenue guidance. They did, as expected, raise guidance by 11%. However, there was whisper numbers that they were going to raise guidance by 15 to 20%. So as soon as that guidance came out, the stock was down 4%, and then gained some of that back when in their press release there was some commentary about a headwind in China sequentially from October to January because of some of these regulations that are being put in place by the U.S. government and their ability to sell chips to China. So the stock then was down 1% and kind of held that level throughout the earnings call. And then during the call, the question came up related to a little bit more detail about what is the impact of these restrictions on the China business. And CFO Colette Kress simply said that there is a substantial impact. And unfortunately, we don't know what that exact number is, the percentage decline. It's going to decline. But in my book, substantial is down, we'll call it 30%. And I also believe that most analysts had expected that the China business would be impacted by some of these regulations, but would have expected, but were modeling for the business to be flat from October to January. And so if you take that adjustment essentially and say that there was effectively a $1 billion headwind if their data center business is down 30% sequentially, that would be a $1 billion sequential headwind to the business. If you add that back to their guidance, they would have guided up 18% versus where the street was at going into the print. And that falls right in line with kind of those whisper numbers that I was talking about, that plus 15 to 20%. And so when you put it together, I think adjusting for China, it's essentially they hit the whisper number, a high whisper number, they delivered on it, and it makes sense that it would make sense to me that the stock would rebound slightly tomorrow. I think it turns green. As long as the broader market's positive, I think that NVIDIA will be green after everything is said and done. But not up much because it essentially was in line with that whisper number. So that's a little bit of context on the very near term. But the most important part, now we're shifting to the pressure points, was, of course, what is the sustainability of growth for the data center segment. This is 75% of the business. It will grow at 300%, right around 300% in the January quarter. So there's just remarkable growth in this segment. And this is driven, of course, by everything that's happened, especially driven by what Microsoft is doing with Azure, Amazon with AWS, Meta and some of their build-outs, and Google with their cloud. And these hyperscalers are the ones that are really pushing demand for these GPUs that are impacting the data center business. So that is what is powering it near term. But the key question did come up on the call, which was, do you think you're going to grow your data center business in calendar 25? And Jensen did not miss a beat. I'm going to read you his exact language. He said, absolutely, I believe the data center can grow through 2025. He did say through 2025. I think that nuance was because that was how the question was worded. My guess is he believes it can continue to grow in 2026 and beyond too, because he gave a compelling case of why this can continue. And when I heard it, I put a filter on it, which was, this guy is as amped up about AI and the hardware and infrastructure side as anybody in the world. So you need to be careful about what he's saying essentially. But his case was that the hyperscalers still are going to take years to build out what their infrastructure is, but there's going to be additional ways on top of this. One is going to be enterprise spending. A second is going to be nations spending and CSPs building out their networking infrastructure. Regional governments, if you think about coalition like Europe, for example, they're spending on AI and building these models and inferences. And so when you look at that context and you layer on top of that my view, which is AI will exceed the hype ultimately, it makes sense that we're still early in this build out and that their business can continue to grow on the data center side. Going into the print, the street was looking for data center growth of right around 20% for calendar 25. And my sense is after all the analysts go through their models, they're probably going to end up at a similar place for 2025, right around calendar 25, right around that 20% growth. That feels like the real number. 26 probably steps down to 15%. So the bottom line is that I think that Jensen presented the proper case that this AI party can continue. And so he did close the call and talked about how NVIDIA is going to be benefiting beyond just the data center, their CPU business, some of their networking and software businesses. And that's all nice to hear. But the reality is that the pressure point on NVIDIA, at least for the foreseeable future, the next 2-3 calls, is going to be solely focused on that data center business. Putting it all together, NVIDIA's October quarter and January outlook was impressive. It met high expectations, and the company continues to be well positioned to have really impressive growth over the next couple of years as they're one of the key infrastructure builders for this paradigm shift. That's a wrap for Pressure Points. I'm Gene. Bye for now.